Hi, my name is Holly Brostek. I am the owner of WIA Consultants. We are also in partnership with Creative Plan Designs. I hope this presentation finds you and your family in good health. We're going to go over briefly what plan sponsors will need to know about and do with regard to the CARES Act and the changes. So let's go over a summary of where we are now as of April 7th. I put the date on there as this is changing sometimes by a daily or minute by minute basis. So the CARES Act was signed into law on March 27, 2020. The act affected a host of provisions, one of which is retirement plans and IRAs. This act affected eligible retirement plan and IRAs in the following fashion. So for qualified individuals, and we'll go through that a little bit later, if the plan allows, will be afforded a coronavirus-related distribution or CRD, and this pertains to IRAs as well as eligible retirement plans, and we'll go over what that is a little bit later as well. In addition, the Act also provides for enhanced participant loans, and that is from eligible retirement plans only. So all individuals, COVID qualified or non-COVID qualified, for lack of a better term, the 2020 required minimum distributions are suspended for IRAs and eligible retirement plans. As of this time, the defined benefit plans are not afforded this relief, nor are money purchase plans. I might be dating myself with that term. The Act also afforded defined benefit plans and money purchase plans a delay in the contribution deadline for those deposits due in 2020. So the DB plans did get a little bit of relief, not as much as some of the other plans. So let's go through. So an eligible retirement plan for COVID distribution, CRDs, enhanced loans, and RMD suspensions, it would be an individual account plan as described in Section 401. So that would be your 401ks, your profit sharing plans, things along those lines. In addition, it includes 403B plans, 457 plans, and IRAs. Just please note loans are not able to be taken from IRAs. So the plan must allow for these provisions. It's a pretty simple process these days. The amendments to the documents are not required till 2022. So we operate in good faith compliance in order to take advantage of these features quickly. So qualified individual. So qualified individual is someone that has either been diagnosed with COVID-19 or their spouse or the dependent was diagnosed with COVID-19. In addition, it's someone that if you've been impacted adversely financially due to COVID-19, so that can include quarantine, layoff, furlough, reduced hours, lack of child care if the schools have been closed. I know that's happening quite often in the New York area and tri-state area, and also business owners that have closed or operated under reduced hours as a result of COVID-19. Now, with regard to a plan sponsor, they may ask, well, what kind of documentation do we need to prove and so that we're in compliance with regulations? Basically, the CARES Act provides for self-certification by the participant. However, in light of this, we do suggest that any documentation that you can get, notes, hand notes, something to document it is highly suggested. So we have a coronavirus-related distribution, or CRD. So the individual that is eligible for this must be a COVID-qualified individual, which we went through a slide or two back. The limit is $100,000 per person, and this is a combination of all IRAs and or eligible employer plans. With regard to 401ks, this would include all money types, deferrals, match, safe harbor, all money types. These distributions are available until December 31st, 2020. With regard to the tax treatment of these CRDs, they are not hardships. They are a different form of distributions, but they kind of look like a hardship. So basically, the 10% early withdrawal penalty does not apply to those under age 59 and a half. The 20% mandatory withholding will not apply, and this may not be rolled over to an IRA or successor plan. The income tax may be paid in 2020 or spread ratably over 3 years. Currently, the law provides for either one or the other. So, in essence, you couldn't do 25% in 2020, 50% in 2021, and then 25% in 2022. It would have to be ratably. And amounts repaid within 3 years are not taxed. Now, how that's going to work, if you've spread it over, paid the tax in 2020 or ratably over 3 years, I think the government's kind of taking one thing at a time. So I'm sure there'll be guidance forthcoming on that. So another provision of the CARES Act are the enhanced loan provisions. Once again, the individual must be a COVID qualified individual. The loan limit is increased to the lesser of $100,000 or 100% of the vested account balance. So these loans are available to, once again, qualified individuals from eligible retirement plans as described on the prior slide, and once again, not available for IRAs. This is available until September 23rd, 2020, which is 180 days from the enactment of the CARES Act. And the loan that's taken, maximum amount must be reduced by current loans. The CARES Act also provides for delay of payment on existing loans. So the maximum delay would be 1 year, and the maturity date of the loan will be adjusted accordingly. Guidance has been issued that indicates that interest will continue to accrue on the loan. And this applies to payments from the date of the enactment of the law, March 27, 2020, through December 31st, 2020 as well. So loan payments that were due prior to 3/27, 2020, they must be paid and must be current. The third provision that we're going to go over is the suspension of the 2020 required minimum distribution. This suspension applies both to COVID qualified individuals and non-COVID qualified individuals. Once again, it's suspended for all individuals for 2020. And guidance has been issued that it does suspend stretch IRAs / beneficiary IRAs. And in those stretch or beneficiary IRAs who are applying the 5-year rule and it's expiring in 2020, it will be extended. In addition, for those who have delayed their first time 2019 RMD into 2020, they may suspend both 2019 and 2020. In some cases, those individuals that have taken their 2020 RMD may roll it back into the plan under certain circumstances. It was a little bit of a narrow window when the law was passed, and it's being clarified now, and it appears to be widening. However, it's not anticipated that is going to apply to beneficiary IRAs. And once again, at this time, suspension does not apply to defined benefit plans or money purchase plans. So at this time, what actions will need to be taken by plan sponsors and IRA participants? You may want to suspend all RMDs from eligible retirement plans and IRAs. We're not quite sure whether all financial institutions will automatically suspend them. It's usually different between each financial institution. So you may want to reach out to them, to your record keeper or financial advisor, to verify that they will be suspended. In addition, for plan sponsors, you would need to decide if you want to allow for the CRDs and the enhanced loan features. For 401k plans with record keepers, meaning ones without individual FBO accounts, so that would be your American Funds, Transamerica, Aspire, Principal, John Hancock. We're finding that most are being proactive and they're adding these features with the supporting forms. However, if you don't hear from them, you may want to reach out to your record keeper and make sure you're both on the same page, whether you want them incorporated or not, and also ascertain the process and obtain the forms and notices that you need for your employees. For plans without record keepers, our firm, we have incorporated the CRD provision into our plan, as well as the enhanced load feature for those who already have a participant loan feature, which is, I would say, 99% of our clients. So should you decide they are not needed, or if you want any more information about taking advantage of these provisions, please feel free to contact our office. Please use us as a resource. We're here to help you not only with this aspect of the CARES Act, but other aspects of the CARES Act. Thank you so much for your time. I just wanted to express our sincerest condolences for those who have lost loved ones to this disease. In addition, we would like to express our gratitude for the dedication of all of the essential workers that are on the front lines, trudging up the slope of the curve and getting us to the other side. We greatly appreciate that. I mean, there's so many to mention. The ones that stick out, the healthcare workers, first responders, government officials and staff, and those who are keeping up the supply chain up and running to our homes and stores. We truly, truly thank you. So, we wish you and your families, loved ones, and colleagues much health and fortitude during this unprecedented time. I believe we are resilient and innovative. As each day passes, we are one day closer to moving from hashtag flatten the curve to hashtag down the slope of the curve. Thank you so much for your time, and be well.